Hi. Uh, so one of the very typical situations that a lot of freedom seekers, face is that when they come to us, they're already invested into regular plans of mutual funds through their brokers or through net banking sites and so on. And when they're already into regular plans of mutual funds, and when we ask them to move to the direct plans or the direct versions of the same fund, there's a lot of resistance. And the resistance is because they'll have to liquidate the existing amount, stop their SIPs, move to a new fund, which is a direct version, start the SIP. And not only that, if they have to liquidate the existing regular fund, they might have to pay some capital gains. Now, that's quite understandable, but they don't understand what they're losing. They think they're losing only 2% of, or maybe 1.5% or 2% of the gains. But what they don't realize is, in effect, it's 2% of not of your gains, it's 2% of your entire corpus that's kept there. So if your gain is like 10% of the corpus in a particular year, they're going to take 2% of the corpus, which effectively means 2% out of 10% goes there. So which is effectively like 1/5 of your gain is given to the fund house for doing what? Nothing. And even if you're in a loss, they're still going to take 2%. Now that's something disheartening for an investor. They're not sharing the loss, they're only sharing the gain. So moving to a direct plan is something which should be done immediately as soon as there's a recommendation from your financial advisor to invest in a particular fund. It has to be always direct, whether it is equity funds, it is debt funds, it always has to be a direct plan. Always remember that. I mean, we keep talking about such fancy investments, latest economic inputs, macroeconomics, microeconomics, talk about the best stocks and all. So I don't know what's going to happen with all that, but if you can't set these basics right, then may the luck be with you. That's the only thing I can say. So try and move to the direct plans of your funds as soon as possible, as soon as you're advised by your fund manager or as soon as you're advised by your financial advisor that this is the right fund for you based on your risk profile, based on your financial situation, then you should only go for direct funds. Okay, never ever go for regular funds. If you're already in regular funds, you must come out of it. If there are any taxes paid, and then get into the direct funds. In the long run, you're only going to gain with this move. Okay, thanks, bye.